Hello everybody, Happy New Year. Christoph the investor here, and I wanted to show you guys my 2023 outlook of what I'm expecting from the stock market, whether to go lower or to bottom. There's three scenarios I want to show you guys in this video that to look out for in 2023, right? This video will help you to time the market better as to when to put your money in the market to make it work for you, right? So let's get into it. First of all, if you're new to this channel, click subscribe and turn on your notifications because I will be doing these videos weekly to help you guys be better investors throughout the recession. So let's start. We're in the S&P 500 chart, the weekly time frame. One candle equals a week, right? To recap, let's zoom out to the monthly time frame. On the monthly time frame, one candle equals a month. I just want to do a slight recap to show you guys pretty much what happened in the 2000 market crash, the dot-com bubble, and then what happened in the 2008. So this is 2000 dot-com bubble. We made a crash. That's when people thought the internet was fake. We eventually recovered, right? 2008 financial crisis, same situation as now. High inflation, Fed raised the rates, market crash. We eventually broke out and recovered, right? COVID-19. We made a high right here in February, March 2020. Then we flushed, we immediately bounced and went higher, right? So now, what are you guys looking at? We're currently creating a monthly correction on the S&P 500, right? So ignore these lines, these small higher lows, lower lows that I highlighted, and let's look at this. So I use the Fibonacci tool to show me where price could come back to. The larger the time frame, the stronger the confirmation. So let's take the Fibonacci. So the Fibonacci tool, you got to draw it from the swing low to the swing high. When you pull it from the swing low to the swing high, you can see that the price is fully in line with these Fibonacci levels. The 38%, the 50%, the 61.8%. The 50% and the 61.8% is the sweet spot. This is where price normally pulls back to. We bounced from the 50 so far, the market is holding up, right? So let's explore the scenarios I expect to happen. So scenario one. This is, to me, a likely scenario, but then it's least likely, right? So let's look at it. Scenario one, I'm going to go on the 1 week chart to get more price action. So with scenario one, we reject from this diagonal resistance level where we're at, and then we continue from where we are now into the new year. First 3 months, we continue down to 325 on the S&P 500. That is the 61.8 fib level, 325. This would also be a healthy retracement, and this would mean by the market is going to keep going down. And it's likely scenario, it's a 30% chance that will happen. But the reason why I don't say it's going to happen most likely is for these reasons, right? When everybody is bearish, that worries me. It's the same thing like when everybody is bullish, right? Everybody's bullish, FOMO, people sell. Everybody's bearish, FUD, fear, uncertainty, and doubt. Market switch, people start buying in. So let's look at this. The market don't bottom without creating a pattern, and it doesn't make a top without creating a pattern. So I knew the S&P 500 made a top when we did this head and shoulders pattern. From we created a pattern, I knew once we broke this neckline, the market topped immediately. So I was trading bearish all 2022. Those trades are the higher probability trades, right? So let's look at scenario 2 now. Scenario 1 is we keep going down to the 61.8, right? Scenario 2, this is also a 30% chance of happening. I just said the market don't bottom without creating a pattern. We started to create an inverse head and shoulders pattern with this chart. right? So inverse head and shoulders pattern is a reversal pattern found at the bottom of a bear market. A head and shoulders pattern, which we just drew, is a reversal pattern found at the top of a bull market. So scenario 2, we can create an inverse head and shoulders and eventually break this diagonal resistance right here and start going up in this area to consolidate, in 2023 going to 2024 when we pick up at the market. That's scenario 2. So let's look at scenario 3, and this is a very likely. I think this is very, very likely. The head and shoulders pattern will complete when we get down here. So the head and shoulders pattern is likely, but this is also likely. A double bottom. We continue down and create a double bottom right here because it's another pattern. It's called a double bottom reversal pattern. And what a double bottom does is it retests the support and say, okay, the support's solid, and the buyers step in, push us up into this region to create a higher high, higher low outside of the range, and then go like this going into the next couple of years, next couple of months to years, right? This is the weekly time frame. Each candle equals a week. This is the S&P 500 chart, which reflects the performance of the overall stock market. I'm Chris the Investor. Please subscribe to my channel to learn more. I just went over 3 scenarios that could happen in 2023 to help you to choose and pinpoint your investment and entry decisions. Personally, I don't think anyone should wait. I think now is a perfect time to start dollar cost averaging in, as we are already in a bear market. We're down more than 20% on the S&P 500. We're down more than 50 to 60% on growth stocks. Value stocks are also slightly down, but we have a lot of investment opportunity is the point. Subscribe to my channel to learn a lot more about these opportunities to come up in this recession. I hope this helps someone. Thanks for watching. See you next video.